Right, time for business, and Emmanuel Abajuya is here. Good evening to you, Emmanuel.
Good evening, Izzy. How is it?
I'm fine.
Okay.
How about you?
I'm doing well, thanks.
Okay. Have you gone to check whether your name is in the voters' list?
No, I've not gone yet. Maybe during the weekend, because I don't have time over the weekend.
During the week to do that. Okay, exactly. Fine. But you need to.
Exactly, sure, I'll do it.
So that you won't be surprised on voting day. You get there and they tell you that your name is not.
I'll make sure I check and it's verified.
Yeah, and I hope you didn't register with an NHIS.
No, I did it with my passport.
All right, you take it.
All right, thank you very much. And thanks for joining me on the business. The Monetary Policy Committee of the Bank of Ghana has kept its lending rate unchanged again. The committee left the policy rate at 26%. This is about the fourth consecutive time since November last year that the rate has been maintained. Speaking at a conference to announce the new rate, Central Bank Governor Dr. Abdul Nasiru Issahaku noted that threat to the economy was not that bad in terms of its outlook.
The committee has decided to maintain the policy rate at 26%. At the May 2016 MPC meetings, it was noted that headline inflation had declined from 19.2% in March to 18.7% in April. However, with the 5% upward adjustment in the ex-pump prices of petroleum products and its pass-through effect on prices, headline inflation moved up slightly to 18.9% in May, but has since declined to 18.4% in June. These observed trends in inflation over the first half of 2016 have largely been influenced by increases in the prices of petroleum products, utility tariffs, and food prices. Since most of these adjustments are cost-push in nature, the current monetary policy stance is deemed appropriate and hence maintained. Core inflation, and that is CPI inflation, excluding energy and utility prices, has stabilized in June.
Meanwhile, Governor of the Central Bank, Dr. Abdul Nasiru Issahaku, has observed that the recent exit by the UK from the European Union has had an impact on Ghana's trade and economy. After pulling out of the EU last June, the cedi spontaneously appreciated in value against the pound sterling.
Now, based on Ghana's strong relations with both the EU and the UK, the impact of Brexit is likely to transmit through the trade sector, foreign direct investments, budgetary support, and the domestic currency market. It is too early to determine the full implications of Brexit, but initial assessments indicate that the local currency appreciated sharply by about 5.7% month on month against the pound sterling in June 2016, compared with 1.3% depreciation in May.
Now, the country's public debt continues to increase despite measures to bring down to appreciable levels. Latest figures from the Bank of Ghana puts the total public debt at 105 billion Ghana cedis as at May this year. George Rafi has more on the debt numbers and the performance of other sectors of the economy.
Bank of Ghana's report covering data on economic and financial issues about the country up to July this year shows that in about 5 months, government has added 5 billion Ghana cedis to the country's debt stock. Loans secured from outside the country accounted for about 62 billion cedis, whilst domestic debt was about 43 billion Ghana cedis. The report, however, shows that when it comes to the public debt in relation to Ghana's GDP, there appears to be some reduction. For instance, in December last year, the debt-to-GDP ratio was 72%. However, it has reduced to about 66% as at May this year. Some are attributing this to the recent expansion of the economy. But government, on the other hand, has maintained that it is rather due to its policies aimed at reducing the public debt. The data also show that the country, as at June this year, earned almost $8 billion from the exports of gold, cocoa, and crude oil. The precious metal brought in about $2.8 billion in earnings. $2.3 billion came from cocoa, whilst earnings from crude oil was just about $620 million. This was mainly attributed to declining prices of crude oil, according to some economists. However, on the reverse side, the country spent about $1.4 billion to finance its imports compared to the $5 billion earned from exports. The country's international reserves appears to be declining as it has reduced from almost $6 billion as at December last year to $5.1 billion as at June this year. On the Ghana cedi, the Bank of Ghana is putting its year-to-date depreciation at 3.7%. The data also showed that after recording some marginal stability in April, the cedi has started depreciating again. On the banking sector, there was some disturbing development, as loans that banks fear might go bad appears to be increasing, a development that some fear could collapse some banks in the country.
Now, away from the financials, the use of technology in agriculture to facilitate markets in recent times has become crucial as mobile penetration in Ghana continues a marked growth. As of April 2016, the penetration level stood at 131.63% and still growing. Speaking in an interview ahead of Joy Business Busy Talks, Marketing Director of Busy, Linda Na, emphasized the extent to which mobile technology is helping farmers to find markets for their products online.
With technology or with speed and reliable 4G internet connectivity, you should be able to conduct your agribusiness from the comfort of your home or from your office, or irrespective of where you find yourself. Even in terms of payment, even in terms of export and import, you can easily sell your products. You can easily find markets for your product. You can put whatever you have, whether it is foodstuff, whatever kind of agribusiness you find yourself in. Basically, technology has become the enabler, and the enabler for businesses to basically grow, bringing people together, bringing new technology together, enhancing the way we go about our businesses, and also facilitating partnership.
All right, so it's a Monday evening, and as usual, we would like to go to the stock market to take a look at how the performance of the stocks have been. And it's with me here, a regular host, John Kujomakum. Good evening, John.
Good evening, Manu.
So how did it fare today?
I mean, as the beginning of the week, normally you would not expect the market to really behave the way it does. Usually around Wednesdays and Thursdays. But then, I think today started on a very good note. I don't know whether it's because the central bank, with their monetary policy rate, actually maintained it, maybe probably showing some confidence to the market. The market did see some 202,530 in terms of volumes traded. At a total value of 192,978. That's quite not impressive if you ask me. If you compare week on week, this is quite marginal in terms of the performance. So, because of that, the total market cap was also affected, going down marginally to almost about 54,497.60 million Ghana cedis. That also did have some impact on the composite index, like I always say, the measure or the benchmark for measuring the total performance of the market, and also the financial index, which also measures only the financial equities listed on the exchange. They lost between 3.84 and 5.09 points for today, and still widening the gaps between the CI and the FI. So the CI is currently standing around 10.91, as the FI is also trading around 13.97. Now, that's exactly what it is. But we did see almost about 4 or 5 equities losing today. Only one gainer on the market. So let's look at the movers of the market as they did appear, or as they did appear. Societe Generale actually happens to be the only equity which really returned 1 pesewa to the investors' capital. But HFC Bank lost 2 pesewas. Standard Chartered, I think for 4 consecutive times, he's been losing money. Today they lost 2 pesewas and opening tomorrow at 14 Ghana Cedi, 23 pesewas per share. And also TBL also did lose 5 pesewas to be closing opening tomorrow around 30 pesewas per share. Now let's cross the continent to go to the New York Mercantile Exchange to look at how the various commodities of Ghanaian interest are faring. Crude oil, as we speak, is losing 31 cents and is currently trading around $47.06 per barrel. And gold is also losing $8.29 to be trading currently $1,328. So gold, as a matter of fact, has lost almost all the gains it made post-Brexit, and now is trading almost pre-Brexit levels. And also cocoa currently is the only gainer of Ghanaian interest in there, and is gaining $22 per ton and currently trading at $3,081 per ton. Now let's look at the Ghana Cedi and how it's actually performing against the major trading currency. Against the US dollar, the Cedi is dropping. For almost about 3 weeks now, the Cedi has been dropping against the US dollar. But against the pound, we saw some marginal improvement against the pound after Brexit, or the decision to actually exit Europe and then post-Brexit. But now, the Cedi is still not enough to really maintain that momentum. So the recovery process for the Cedi against the pound has not been that significant. But against the euro, the Cedi did see some marginal improvement. Against the Chinese yuan, it did same. But the CFA is still stronger. So that's exactly how the market is. So on the currency market, it's quite tepsy-savvy there. Against on the commodity market, it's also not good for crude and gold. But for the Ghana Stock Exchange, those investors there, I think it's also the time for investors to also look at the market, because now prices are very low there, so you can go in there and buy something.
Before you finally go, to what extent will interest rate change affect the trading on the stock market?
Actually, interest rate has what we call the opposite relationship with, or negative relationship with, the market. Anytime you see interest rate go up, the stock market, also have some effect in there. So I think we take some time to sort of educate the public on that as and when. But now I think we don't have that much time, so we surely do that some other time.
Maybe on market.
Exactly.
Thank you very much, John. All right, so that was John Kojo Amoakun, our stock market analyst, ending tonight's business. Thank you very much for your company. My name is Emmanuel Apuaji Viafi. You can join John again for detailed analysis of the market tomorrow on the Marketplace. Good evening for now.